So I took a poll on YouTube to see what video you guys wanted to see next, and we had over 400 votes, and a NIO stock update video barely took the win with about 41% of the votes. So today we're going to talk about the reasons why NIO stock is getting absolutely destroyed and why I'm still buying the stock regardless. So hit the like button if you enjoy these kind of stock update videos, and let's get started. What's up everybody, my name is Ala and welcome to my world of stocks. Now as you guys know, NIO is a very small speculative position in my portfolio, and I've mostly been buying the stock in the $6 range, but because it's been crashing by so much, I've actually been able to pick up shares as low as the $4 range, which is pretty cool. And a lot of this has to do with some recent developments. Now here's a 6-month chart showing where I did the majority of my buying, and I only sold a tiny amount at above $10 to lock in some really big profits, but I've still been holding the majority of my position as a very long-term investment. By the way, that huge rally to the $10 mark came after a 60 minutes episode that featured the company and their CEO, which convinced investors to rush into the stock based on mostly hype alone, which is the real reason why I cashed in some profits, because I had a feeling that it would pull back, but I wasn't expecting this big of a crash. If we zoom in a little closer, we can see that they have since dropped by almost 45% in 1 month, and over 50% from that recent peak of $10, and over 63% from their 52-week high of $13.80 to now trading for just less than $5 a share at the time of this recording. And since I'm more of a long-term investor, I jumped at the opportunity to pick up more shares and have now been able to lower my average cost basis to just the $5 range, which I am very happy about. So why has the stock crashed by so much? Well, obviously the 60 minutes episode caused a huge hype rally that left a lot of downside risk, but it all basically started with their newest earnings, which was Q4 of 2018. Now the problem wasn't necessarily the reported quarter itself, as they still saw vehicle orders and deliveries surge quarter over quarter by over 91% and 144% respectively, and they also beat their guidance for the year of having 10,000 cars delivered, coming in at over 11,000. And despite seeing losses continue to pile up, GAAP EPS still improved from negative $42 the previous quarter to just negative $3 this last quarter, and non-GAAP EPS improving from negative 10 to negative 3. Revenue also soared by over 133%, so that's pretty high growth. Now, in my opinion, the problem was really their monthly delivery updates and their guidance for the first and second quarter of this current year, that being 2019. See, January deliveries came in at just 1,805, representing a month-over-month decrease of around 45%, and deliveries for February were even worse, dropping to just 811, or a month-over-month decrease of around 55%. The weakness in sales is also expected to continue, as they mentioned that there will be continued weakness through the second quarter because of the Chinese EV subsidy cuts and the macroeconomic conditions in the slowing down Chinese economy. But a couple other reasons why the stock has been crashing has to do with NIO announcing that they will not build their own manufacturing plants that they previously planned, an IPO lockup period that expired on March 11th, and the Chinese government announcing that it will scale back its subsidy program for EVs later this year, and there is even a lawsuit going around from shareholders who want to be reimbursed for their losses. All of this has led to investors panicking and selling the stock, and a lot of traders kind of flooding in and shorting the stock, many of which claiming that NIO is probably going to be going out of business sometime soon. But this is where I really start to disagree with all the bears. And so now we're going to transition in the video, and I'm going to give my counter arguments to all of the kind of bearish arguments that I just listed for the stock crashing. Okay, starting with the IPO lockup period expiration, that's always the case with stocks. There's many times where an IPO lockup period will expire, and so a lot of investors that were restricted from selling their positions, who may have now changed their mind and regret buying the stock, they are now able to sell the stock. So of course you're going to see a large percentage drop, and that's usually the case with a lot of stocks. But if you're a long-term investor, that's not something that should be bothering you. Now, if you're a short-term trader, yeah, of course that's something to worry about. And if you're a swing trader and things like that, and I'm not saying there's anything wrong with being a shorter or a short-term trader or a swing trader, there's nothing wrong with that. But if you are a long-term investor, an IPO lockup expiration should not be a concern for you. It should just be an opportunity to pick up more shares at a cheaper price. Okay, now the second issue going around is the lawsuit, and I can't comment on this too much because first of all, I don't want to speak for the people suing, and I haven't researched it enough myself to give a full opinion on it. And anything can happen with a lawsuit, so we just kind of have to wait and see. But it kind of looks like some investors are not happy with the way NIO has been releasing information, like the way that they announced that they'll be canceling their own factory, and how big of an impact the Chinese EV subsidy cuts are having on their business. You know, they feel like maybe they could have had a bigger warning and things like that. I just see that as a long-term investor, I still just see that kind of as a short-term issue, similar to the IPO lockup. I see it as a buying opportunity, so it's not something that I'm really concerned about. Okay, now with those two issues out of the way, the real issues that I'm worried about as a long-term investor are the cancellation of the factory, the Chinese EV subsidy cuts, and the slowing down Chinese economy. So we're going to tackle those bigger issues now. And when starting with the Chinese EV subsidy cuts and how that's having an impact on sales, the first thing that you have to understand is that we were expecting the Chinese EV subsidy cuts to be announced earlier in the year. So sales kind of ramped up at the end of last year to take advantage of all the EV subsidy cuts, and NIO ramped up production as well and got as many cars out there. So we were coming off of some pretty high number months and then went into January and February. And so obviously it was kind of a hard act to follow, kind of in the short term. On top of that, something that I don't really see anybody talking about is the fact that NIO has literally thousands and thousands of pre-orders on vehicles that haven't even been released yet. And of course, you're not going to get that information from shorters. They want to damage the stock as much as possible. But the reality is that there are thousands of pre-orders on vehicles that have still not been released. In fact, at the time of earnings, they already had over 7,300 pre-orders for their smaller, more affordable SUV called the ES6, and that vehicle isn't even being released until June. There were also another 4,200 orders for the older ES8, with 1,300 of those being for a smaller 6-seater version that isn't launching until the second quarter. So even though sales are looking very weak at the moment, management is still guiding for vehicle deliveries to possibly be as high as 45,000 for the year. Let's do some math to show how this could play out. Well, we know that they had around 1,800 deliveries in January and 800 in February for a combined total of around 2,600. If we subtract that from the 45,000, we still have over 42,000 deliveries left over. That's over 4,000 deliveries in each of the remaining months. That's a lot of monthly deliveries, and because they already mentioned that Q1 and Q2 will be very weak, they must be expecting a huge surge in deliveries in Q3 and Q4 once their full lineup is available, and that may help recover the stock. My guess is that we're probably seeing a lot of potential customers waiting for the smaller ES6, since it will likely cost around 100,000 RMB less than the larger ES8. Still, there is really no guarantee that management will reach their own guidance, especially when you consider the EV subsidy cuts, which in my opinion is a big concern because the Chinese government essentially cut the EV subsidies in half from 50,000 yuan to just 25,000 yuan, or close to 4,000 US dollars. This is a big deal because the Chinese economy is already going through some tough times, and NIO has also noted that they don't plan to lower their prices to make up for those subsidy cuts. So with consumer confidence already being low in China, I could definitely see this leading to some weaker sales throughout the year. A Bernstein analyst also agrees, as he was quoted saying, "While OEMs will see some earnings damage, we consider NIO the most vulnerable of all." On the bright side, NIO did already warn investors about the looming cuts during their last earnings call, where they noted that they were expecting them to be significantly lower, so I think the lowered guidance may already be factoring that in. And while the subsidy cuts will undoubtedly have a negative effect, NIO also noted that because they're a luxury EV maker, their business is impacted much more by tax cuts rather than subsidies, as their CEO was quoted here saying, "We will receive very limited effect from the decreasing subsidy, and on the other hand, we do receive a lot of advantages with the taxation. So in the long run, we will be in the advantageous position." And speaking of taxes, the Chinese government recently announced new tax cuts of almost 300 billion US dollars to help recover their slowing down economy. Speaking of which, I fully expect a trade deal to be done later this year between the US and China, and that should also help restore consumer confidence in the country that may lead to higher sales at the end of the year. So again, sales are expected to be very low in Q1 and Q2 of this year. So basically the first half of 2019 2019, don't be surprised if NIO stock actually goes lower. But with that said, I think that if a trade deal gets done between the US and China, and you couple that with the already lowered guidance, that does leave a lot of potential upside for NIO at the end of the year, where they could see sales climb up and they may actually beat that already lowered guidance. Keep in mind that the Chinese automotive market is highly cyclical throughout the year. Here's a chart of Chinese vehicle sales for the past few years, and you can clearly see the seasonality effects where sales typically shoot up towards the end of the year and then crash really hard at the start of the next year. So I think that seasonality, coupled with the Chinese New Year holiday in February, where manufacturing completely shuts down for most of the month, would obviously have a hugely negative effect on the recent sales. So is this a company that is burning through cash? Absolutely it is, but they just started selling vehicles less than a year ago. So if you think you can magically create a company that sells luxury electric vehicles that have artificial intelligence, autonomous driving functionality, battery swap technology with similar performance to something like Tesla and not have to burn through cash, then I think that you're 100% delusional. It takes a lot of money to make more money, and Tesla is a perfect example of that themselves. But when looking fundamentally at NIO, I don't think that the story of their future potential has really changed at all. The global EV market is still expected to grow from $118 billion in 2017 to over $500 billion by 2025 at a compound annual growth rate of over 22%, with China already doing close to 3 times the numbers of the US and 2 times the numbers of all of Europe combined. For context, China alone is buying 1 out of every 2 electric vehicles sold in the entire world, and their amazing growth is expected to continue at least until 2030. That does sound awfully optimistic given the already very high sales, but a new report from Clean Technica shows that EV cars will still make just around 8% of the total vehicle market in China this year, and that's coming off of just 4% last year and 2% the year before that. So essentially the EV market share in China is doubling every year, but it's still incredibly low, leaving a lot of growth potential still out there. Now, before we wrap up this video, I just want to address the last argument from bears, and that's that NIO canceled the building of their own manufacturing plants, and they see this as a sign that NIO is failing and will not have high enough sales to warrant building their own plants. But once again, I'm left disagreeing with the bears because the facts say otherwise. See, in their last earnings, NIO announced that they want to focus more on their partnership with Jack Motors for at least the next 2 to 3 years to help them grow and then take advantage of further partnerships in the future if necessary. Now, apparently nobody listened to that actual conference call because NIO clearly stated that the reason why they're doing this is because the Chinese government is now officially endorsing partnerships between R&D companies like NIO with manufacturers like Jack Motors. Now, it remains to be seen what all the benefits will be exactly, as the new file won't be finalized until June, but just a few of the benefits that NIO's CEO quickly mentioned on that conference call were that they can apply for subsidies and emission credits directly from the government since Jack Motors is state-owned, and they can also spend more time managing and developing their own products rather than worrying about manufacturing them, which we all know was a major hurdle for Tesla. NIO, on the other hand, benefits from a manufacturing partner that can already pump out 100,000 units per year, with that number growing to 150,000 in the next couple years after they introduce a third model that hasn't even been announced yet. But my guess is that it could be an even cheaper sedan to compete with Tesla's Model 3. And NIO mentioned that they can form even more partnerships in the future to keep the growth moving as part of their long-term strategy. So even if they need to produce more vehicles in the future, they can either decide to build a plant at that time, or they can just use more partnerships that benefit from the endorsement of the Chinese government. Keep in mind that China is a communist country, so having a closer relationship with the ruling governments in power isn't really a bad thing. Now, I mentioned the Tesla Model 3, and that's another area where bears seem to think that NIO can't compete, since Tesla will actually have their own manufacturing plant in Shanghai and will soon be able to pump out Model 3s for a lower price. But NIO also addressed this in their earnings call, saying that the base version of Tesla's Model 3 costs over 400,000 RMB, while their new ES6, which is actually an SUV rather than a sedan, costs only around 258,000 RMB and has significantly better performance than the Model 3, and it's also a luxury SUV, which is far more popular than luxury sedans in China. Their CFO also noted that the Model 3 only has a range of about 300 kilometers, while the ES6 is over 500 kilometers and has a dual motor versus the Model 3 with only a single motor, and it also does 0 to 60 in 4.7 seconds, while the Model 3 is at 5.7 seconds. And that's not a knock on Tesla. I'm actually investing in Tesla myself. I just released a video letting you guys know that I'm finally buying the stock myself. So I'm invested in both companies now. And the reason why is because I still have very high hopes for the electric vehicle market as a whole. And I think that there's a lot of growth opportunity for the very long term. Ideally, I would like to hold Tesla stock and NIO stock maybe for decades, unless, certain things change. Sometimes the stock just climbs really high based on hype, and that's where I start to trim my position a little bit. But in general, I try to buy on dips and pullbacks, and then I try to just kind of build that position for many years or even decades, unless something changes with the company, then I have to readjust, of course. But anyway, that's kind of how I feel about that. One last thing that I want to mention is that if you were to ask me, is NIO stock a speculative stock? I would say absolutely it is. And, could you possibly lose all of your money investing in NIO? Of course you can. But I just really feel that a lot of the negativity is blown way out of proportion. And I do think that there is a lot of potential upside for NIO in the very long term. So that's why I'm buying the stock. But leave your thoughts down below. I'd love to read your comments, and let me know if you're trading NIO stock or investing in them or anything like that. And I think that's about it. Hit the like button, please, if you don't mind. And thank you for watching. I'll see you guys in the next video. Take care. Bye-bye.